many US investors are less aware of is the effect of the dollar's decline on foreign investors investing in US equities. That the S&P 500 was up just about 18% last year. But if you were a European investor denominated in euros, or a Swiss investor investing in Swiss francs, or a Swedish or Norwegian investor in the krona, you weren't up nearly 18%. You're up just low single digits, or potentially even negative in the case of the Swedish krona. So that is causing a rebalancing trade for investors in those countries. And so I'm not saying that there's a mass exodus out of US stocks. I'm just saying they're likely rebalancing that. Some of that money gets put to work in European equities, and some of it's looking for growth stocks. And China has a whole host of growth stocks. And we see that with flows across European ETFs that invest in China. That's only a $3 trillion market in terms of European ETF assets, but over $8 billion went into China ETFs. And we can contrast that with here in the US, which has $13 trillion ETF market. Not even $2 billion went into China ETFs. So it's just like, why would a European investor have such a higher probability or desire to invest in China? Well, someone's just like, well, the US stocks, like, they're not doing that well because of this currency decline. And I think that's a factor that is really underrepresented out there in the market, that we see money in motion in Europe. A lot of it's ending up back in China. Haven't seen that quite yet from US investors, but something to really think about.